Good morning, everybody, and good afternoon for my peeps that are Central Standard Time and Eastern Standard Time. It is me, Michelle Robinson, and I'm just here to help. Here on day 22, I'm just here to help, helping everyone live prosperously. So thank you all who have, for all of you who have been with me on this journey for the last 22 days. Last 22 days as we celebrate Life Insurance Awareness Month. I have committed to coming on here every single day at 11 o'clock a.m. to share with you information about life insurance. Why? Because me and my colleagues have found out that a lot of people don't know what life insurance is and they don't know what it does. And so today I want to talk to you really briefly about the differences between whole life and index universal life, okay? And I want to be crystal clear that this is not like an exhaustive type, in-depth, going deep into the details type of this is index universal life insurance. This is just a very high level overview to help you understand the distinction between the two. Anything more, you're going to have to attend one of my presentations or set up a consultation with me. All right, so let's get into this. When you look at whole life and index universal life insurance, they are both permanent life insurance policies. Both permanent life insurance policies, which means that once you are approved and your policy has been issued, you do not have to worry about an increase in your premiums, and you don't have to worry about your policy being canceled, regardless of what type, like if you end up getting or having some type of medical issue after your plan or policy has been issued, you are good to go. There will be no more medical underwriting. There will be no more reassessments or anything of that nature with whole life or index universal life, IUL. Once you are approved, and it is a permanent policy. Okay. Both of them are permanent policies. A whole life policy essentially is a permanent life insurance policy that provides you with cash value. It is cash value life insurance. And so you have a death benefit that that is part of your policy, where when you pass away, your beneficiary will receive that death benefit tax-free. In addition to that, you have cash that is accruing alongside of your death benefit. Whole life policies, some whole life policies, the policies that me and my colleagues do, also have dividends. Dividends are not guaranteed, but for the last 100+ years, people have been getting dividends on their policies. Whole life policies, the ones that me and my colleagues have access to, we use those for debt elimination, and we also use those for infinite banking. Won't go into any details about that. The biggest thing that I want to emphasize about whole life insurance here today is that the interest rate that you get on your cash accrual within your whole life policy is a steady percentage rate, okay? And right now it is around 3%. So if you were to get a whole life insurance policy, the cash value would grow and compound interest at a steady 3% interest rate at this time. Okay. We try to think if there's anything else I want to say about the whole life insurance policy. It is definitely a wonderful way to go. And when we do whole life insurance policies, especially when I spoke about debt elimination and infinite banking, those policies must be properly structured to be able to do those things. So just any whole life policy does not have the ability to do infinite banking or debt elimination. There's a certain way that the policy must be structured in order for it to do that. Index life insurance, index universal life insurance is also a permanent life insurance policy. This is a life insurance policy that I would say is, as it relates to the cash value, this is for long-term growth. It works on an index, meaning that it is most definitely attached, and this is the cash portion of it. So there's a death benefit where if you pass away, your beneficiary will get that money tax-free, but there's also cash value as well. And as that cash grows, it is connected to an index, and that index is connected to the stock market. And so as the stock market goes up and down, so does the interest rate. So you can get, pretty high interest rates, or you can get zero. The key is you would never go under zero. So how, if you invest your money in the stock market and you can lose, your money if the interest rates go down? I look at my stock accounts right now and I just shake my head because I see all that red. Never happened with an indexed universal life insurance, but you benefit off of the highs of the stock market. This is for long-term planning. Not to say that you cannot access your cash value short term, but it is typically used for long-term types of things such as retirement planning. My husband and I both, we have index and whole life policies, and we utilize our whole policy for infinite banking, which, helps us with investments and business opportunities and so forth. And then we have index universal life insurance, which is set up for retirement. Again, can I access the funds prior to retirement? Absolutely, 100%. But just because of the ebbs and flows of the market, it's important to keep that in mind as it relates to, your long-term planning for the cash accrual. Both policies are excellent policies to have. I would most definitely encourage you to get them for your children, to start thinking about them, getting them as young as possible. The Index Universal Life Insurance policy provides flexibility. There's a target premium that you should be paying every month. But if something happens and you're not able to pay that amount, there is a minimum premium that you are able to pay that will keep your policy in force. There's also a basically maximum premium that you can pay that will help you fund your insurance policy. And some people will say, well, what does all of that mean? This is why you need to contact me for a consultation. But fund it, because honestly, you want to put as much money as you possibly can into your IUL. And I'm actually going to get ready to pause because I can go. This is a whole lesson. That's a whole lesson. So the difference again between a universal life insurance, index universal life insurance, and whole life insurance, the main difference is the way the interest is. Whole life, steady interest rate. Index universal life It can go up and down based on the stock market, but you'll never lose any money. And then the IUL also provides a lot of flexibility as it relates to a minimum premium that you can pay if you're unable to pay the target premium, as well as the option to put more money into your policy. Index universal life insurance policies, the ones that we work with, also provide a host of living benefits, as well. Can be used for college funding. There's so many ways that you can use an IUL. It's ridiculous. That's why I say this is just very, very high level. I know some people look at this and be like, well, you forgot about this. You forgot about, I didn't forget about nothing. This is a high level overview. This was not even intended to be the 11 plus minutes that it is at right now. But listen, if you would like more information about whole life or index universal life insurance policies, please reach out to me. Go to my website, www.justheretohelp.com, or you can email me, jonte@jmichelle.com. Send me a text message, 503-908-9050. Let's get a consultation scheduled so I can walk you through the benefits of both a whole life policy and a index universal life insurance policy. I will see you all back here tomorrow at 11 o'clock a.m. You have a fabulous rest of your day. Bye-bye.